Good to see a few of you and to see all the names listed up here. Um, I'm going to call to order the meeting of the Federated City Employees Retirement System and the Federated City Employees Healthcare Trust. We'll start with the roll call. And so Jay Castellano, I'm here. Vice Chair Anurag Chandra.
Here.
Thank you. Trustee Horowitz. Trustee, there we go.
Here.
Thank you very much. Trustee Jennings.
Here.
Thank you. Trustee Kelleher.
Here.
Thank you. Trustee Orr.
Here.
Thank you. And Trustee Sun.
Here.
Okay. Thank you very much, everybody. This time we're going to go into closed session, and just to set the expectation, we're estimating closed session today will be about 2 hours. And then we'll take a 10-minute break coming out of closed session before we reconvene the open meeting. All right, so with that, Linda, are you the one taking care of us? Thank you. open session. There are a couple of reportable actions from closed session with regard to item Roman numeral 1A and the pending litigation. We have two actions approved by the board unanimously. One is to engage Reed Smith to defend Federated in this action and any other person whose defense and indemnity is accepted. The other action approved by the board unanimously was to accept the tender of defense and indemnity of CEO Roberto Pena, subject to a reservation of rights. And then with regard to closed session item Roman numeral 3A, the board unanimously adopted the performance review for the chief executive officer. And 3B, the board also unanimously adopted the performance evaluation for the chief investment officer. And with that, council, is there anything else I needed to report at this time before the board takes a 10-minute break?
Nope, that was perfect.
Okay, great, thank you. So as I announced to everyone before we went to closed session, we're going to take a 10-minute break and then we'll jump back into business. I appreciate the patience of everyone who's been waiting for us to come out of closed session. See you, right now it's 10:16. Let's come back at 11:25. Thank you, everybody. Linda, if I'm Jennings will be back. I just know a lot of people have been waiting for a long time for us to come out of closed session. I do appreciate everyone's patience. So as we resume open session, I'll announce ground rules. We have some background noise, but I'll announce some ground rules for our COVID Zoom meetings. One, all votes will be roll call votes. If you are not speaking, please be on mute to cut background noise. For discussion items, each trustee will have a turn to speak in roll call order more than once if desired. The public will have an opportunity to speak on each item after the trustees, and the public will also have an opportunity to speak again at the end of the meeting on any other item not on the agenda that is within the subject jurisdiction of the board. Under orders of the day, there will be a hard recess at 1 o'clock from 1 to 1:05 to accommodate Civic Center TV's broadcasting process. So we'll watch for that and announce that as we're getting close. There are a couple items that require a waiving of sunshine. First is item 1.5D, ORS's quarterly newsletter, the retirement connection, and item 1.6A, approval of requests from Lawrence Wagner to terminate retirement benefits effective October 17, allowing for a reinstatement into the plan effective October 18. May I have a motion to accept the orders of the day?
Trustee Kelleher, so motion.
Was that Trustee Kelleher?
Yes, it was.
Yeah, thank you very much for the motion. We have a second.
I second it.
Trustee Jennings seconds that motion. Any discussion from trustees? Any discussion from the public? Okay, let's do a roll call vote on this one. Just Vice Chair Chandra.
Aye.
Thank you. Trustee Horowitz.
Aye.
Thank you. Trustee Jennings.
Aye.
Thank you. Trustee Kelleher.
Aye.
Thank you. Trustee Orr.
Aye.
And thank you very much. And Trustee Sun.
Aye.
Thank you. I also vote aye. That motion carries unanimously.
How is it?
Let's see. All right, we're going to move now to the consent calendar. Agenda item 1. The consent calendar today includes the approval of service retirements, the approval of deferred vested, approval of board minutes, approval of return of contributions, acceptance of communication information reports, approval of termination of retirement benefits, approval of travel conference attendance, and report out of closed session. We have a motion and a second to approve the consent calendar.
A motion to accept. Trustee Jennings.
A motion from Trustee Jennings.
Trustee Kelleher, seconds.
Trustee Kelleher seconds. Thank you very much. Any trustee discussion? Any board discussion? Okay, let's do a roll call vote again on the consent calendar. Vice Chair Chandra.
I vote aye.
Thank you. Trustee Horowitz.
Aye.
Thank you. Trustee Jennings.
Aye.
Thank you. Trustee Kelleher.
Aye.
Thank you. Trustee Orr.
Aye.
Thank you. Trustee Sun.
Aye.
Thank you. I also vote aye. So that motion to approve the consent calendar carries unanimously. Moving on to item 2. Pardon me. Death and survivorship notifications. At this time, I'd like to ask for a moment of silence in recognition of employees who worked nobly for the city of San Jose and have recently passed. Thank you very much, everyone. Item 3, investments. 3A is the oral update from the CEIO, Mr. Palani.
Thank you, Mr. Chairman. I'm actually Zooming using my iPhone to save on broadband. Hope that's coming through clearly.
Yes.
We do have a lengthy investment section this morning. We had an offsite last month, so some of those items are actually going to be discussed today as opposed to September, which makes it a little lengthier. And so without further ado, unless there are questions for me, I would actually like to move to 3B. Happy to take any questions, barring which I'd like to invite Ms. Boyer and Mr. Starr to talk about PE update for Q1.
Hi, thank you. This is Casey Boyer, and I'm here from Neuberger Berman today to present the Q1 report for the retirement system. So first I will just mention, happy to be here. The presentation you'll see today is slightly different format-wise from what we've presented in the past. We added a couple pages that we thought might show more of a high picture of the exposures in the portfolio and where some of the returns are coming from. So I'll go through that today. And obviously, just wanted to start out a little bit with the market, and obviously I'm presenting Q1 information. We actually already have received Q2 information, so while I'm presenting, I'll also throw in some information that we've received from Q2 as it might be helpful. We've done a lot of research at our firm and have really followed valuations and the market and how things are laying out between Q1 and Q2. And one of the probably most surprising things about this time period and the year of 2020 is that the valuations and quarterly performance for private equity, typically valuations take a little bit of time to flow through. However, with the virus and how everything has affected companies pretty dramatically in some industries, private equity firms were pretty quick to write down and take conservative approaches in Q1. So throughout the presentation, you will see there were some marks that came down in Q1. Now, the other surprising part is that everything has pretty much rebounded in Q2. So while Q1 and what I'm presenting today is slightly down from Q4 2019, we've actually seen a full rebound in Q2. So it's a little bit of two stories here. And luckily, I think your portfolio looks very good today. It's still very early in the investment, so there's still, for maybe some that aren't doing as well, for them to rebound in over time. So just starting on page 2, this just provides a good overview of both the legacy investments and the strategic partnership with Neuberger Berman. You'll see that we have committed nearly 240 million, and we have just a little over 20 million that we were committing over the next 3 months. At the end of Q1, the net IRR was 8.2, you will see there. As I mentioned, definitely down from Q4, which we expected, but has already seen a nice rebound in Q2. If you turn to pages 3 and 4, this is our benchmarking analysis, and 3 and 4 are looking at the underlying fund investments for the legacy portfolio. On the right, you will see how these funds benchmark against their peers. So first, second, and third, and fourth quartiling. You'll see the top line of each fund is the performance of that fund. And under that, you'll see kind of where the benchmarks layout. So at this point, a lot of these funds are older in nature, and so you won't see a lot of bouncing around in returns for the quartiling. So not a lot has changed from this point. And I apologize. Page 3 is legacy. And starting on page 4 and 5 is the Newburger Partnership Fund investments. So you'll see that in the same context, the IRR and MOIC quartiling metrics for each investment. We've done this through vintage year 2018. 2019 benchmarks are not available for that time period as performance is still very early and not we use the Cambridge pooled return as our benchmark, and they do not have information out for 2019 just yet. So if you turn to page 6, this is actually the start of kind of a new format. So what this is meant to show is how your underlying portfolio is exposed to on both a investment type basis from co-investments, primaries, and secondaries, both on committed capital. So what we've actually committed to through March 31st, and then what has actually been invested and put into the ground. So for instance, the first couple pie charts, you'll see we've committed to around 76% of the portfolio total commitments. However, just under 50% of that has actually been deployed into primaries. So you'll see in one of our, one of the great things about co-investments and secondaries is that that capital does get put into the ground quickly and starts generating performance rather quickly. So you'll see how this is laid out. The Newburger Strategic Partnership are the 4 pies on the left. And on the right, you'll see how that works into your overall portfolio, including legacy investments. Turning to page 7. Page 7 shows the performance. So if you look at the top chart, this is showing the performance by primaries, secondaries, and co-investments. As I mentioned, co-investments and secondaries are put into the ground quickly. So that provides capital efficiency, but it also really helps generate early returns. So you'll see here that continues to be the case. And it has been helpful to your overall portfolio. So secondaries off to a good start, as well as co-investments. Primaries are obviously continuing to commit and put capital into the ground over time. So those just take a little bit more time to gain traction. On the bottom half of the page, this is a benchmarking analysis of the portfolio. So of the Newburger Partnership, you'll see the net returns, which are the same returns that were shown on the very first page. We're showing both Q1 and Q4 and how that relates to the benchmarks for the peer group. So as you can see, second quartile on an IRR basis and first quartile on a TVPI basis. I will mention that, if you look at the Q1 returns, 8.2% net IRR, 1.0 times TVPI, that is our Q1 performance. These benchmarks are actually Q4 2019. Those are the most recent available at the time that this report was produced. So it is a little bit apples to oranges here, given performance dropped in Q1, given all that was going on in the world. So page 8 and 9, I won't have too many comments here. A lot of underlying detail into not only the fund investments, but also the individual co-investments and secondaries that we are making, as well as legacy investments. You'll see this performance at a gross basis for all the underlying investments, and then also at a gross basis for the total legacy and Neuberger portfolio. So I'll stop there and see if there's any questions. Happy to answer anything that I missed or may have more questions.
Okay, questions,
Jay?
comments?
Yeah, I have a question. It's directed at CIO Polani. Okay, can I go ahead and ask, Jay?
Yes, please. Thank you.
Yeah, okay, yeah, great, thank you. I wanted to, so there are some venture capital investments reported by Neuberger Berman, and I just wanted to understand, since we had a discussion in closed session about a couple of investment opportunities, on a go-forward basis, we will be in charge of that asset allocation to venture capital, not Neuberger Berman. Is that correct?
That's correct, Trustee Chandra. Yep.
Yeah. Okay. Thank you very much.
Sure.
Other questions, comments from board members?
Follow up, this is Trustee Sum. So does that mean that the investment categorized as venture capital will be part of the venture capital allocation in according to the investment policy statement?
That's right. Brian, do you want to talk about that in the context of pacing?
Sure. So up until I think it was the middle of 2019, we didn't have a venture capital asset class. We just had private equity, which included venture and buyout. And so when we were implementing the Neuberger Berman portfolio, there was a portion of it that was targeted at venture capital. So that was how we progressed and proceeded until it became the strategy to kind of carve that out from buyout. Now, for simplicity's sake, and because of the relatively small amount of capital within the Neuberger Berman program that is technically allocated to venture capital, we've just said that on a direct basis, we're starting from zero. And these investments within the fund of one will just be considered as part of the whole buyout portfolio.
So right now they are going to still be considered as a private equity instead of venture capital. Am I understanding correct?
Yeah, because we just consider the fund of one to be our buyout exposure. So that's how we classify it.
And then it's not going to change in the future. It will remain the buyout exposure as a private equity for the foreseeable future, right?
We will continue to have that exposure within the fund of one portfolio, but there will not be additional investments in the fund of one that are similar to that.
Okay. No, what I'm trying to clarify is these buyout, because they are classified as venture capital. Are we going to count them towards our asset allocation in venture capital, that 4%, or they are not going to be?
No,
That's what I'm trying to clarify.
Well, we are not going to count them towards that.
Okay, got it. Thank you.
This is Trustee Jennings. I have a question.
Yes.
On the legacy that we're talking about, is that in private equity or what is that in?
Sure, I'll take that. So in the early 2000s, the plan decided to move into the private equity asset class and did so with a few commitments to commingled fund of funds. That program made just a few commitments over a few years, and while the plan maintained a roughly 9% target allocation to private equity, never came even close to achieving that level. And so in 2015, actually, staff began a process of evaluating who we could partner with to make sure that we are able to successfully implement the strategic asset allocation. And the partnership that we have with Neuberger Berman today is the outcome of that process.
Okay, so the legacy is what we did internally, and then the Neuberger one is the one that where we partnered with them?
Yes, those investments that are part of the legacy portfolio are investments that the board approved before we engaged Neuberger Berman.
Those are prior boards. Those are investments from a while ago. They certainly predate. They predate me, and I think I have one of the longest tenures on the board.
If I can just add, I think, Brian, correct me if I'm wrong, there were prior boards, as Trustee Chandra pointed out, and they may have, those recommendations previously may have also come from our consultants at the time.
Yeah, the process of approving investments historically was very different, and the composition of the board was very different. So it's very much a legacy program, and that's why we carve it out separately.
If I can make one comment before we move on, I recognize that Innovation Endeavors is a 2018 vintage, but it is, I know it's only a sample set of one, but significantly outperforming the other venture capital investments that were made in the fund of one portfolio. You know, we are blending by keeping even. I understand the logic. It's probably a little simpler at an administrative level to think of all the investments in the fund of one as private equity. But if we're really trying to get to the return in private equity versus venture capital, at the very least, I would break out Innovation Endeavors and include that in the venture capital bucket. 2018 is not that long ago, and it's sort of evidence of what the staff is capable of doing when they pursue a direct venture opportunity.
Thank you, Trustee Chandra. We will. I'll discuss with Brian on how to break that out for sure.
Okay, other questions and comments for Casey and Neuberger Berman? Okay. Thank you, Casey, for joining us again. Appreciate it.
Yes, thanks for having me.
Okay. Mr. Polani, do you want to steer on the rest of the presentations?
Sure. Thank you, Mr. Chairman.
Yes.
Thank you, Casey. Thank you, Brian. And the next agenda item is private markets update for Q1 by, again, Brian and Laura Wyrick.
Hello, everyone. This is Laura from Makita. I'm joined by my colleague, Jared Pratt, who will assist with presenting in a bit. You know, I would just echo Casey's comments from Neuberger Berman about how the reports today are a bit outdated, mainly because of the retreat last month and no meeting in August. But the good news is especially the public markets look pretty phenomenal as of June 30th for the Federated performance. But I will start with private markets. So as you recall, this is the public version of the private markets report. Staff receives a more detailed private version. On page 2, excuse me, on page 2, you can see the legacy versus Neuberger Berman versus private debt, real estate, and real assets portfolios. You can see on the right, we have the IRR, the internal rate of return, which is a measure of the performance. And then we also show a PME IRR. So this is a public markets equivalent internal rate of return. So the far right column is what could have been achieved by investing in the private market, or I'm sorry, in the public markets over the same time period. So you can see in general, there's been a higher return from investing in private markets, which is the IRR column. One notable exception to that is private debt. I know we've discussed in the past that the legacy private debt investments weren't even really designed to be private debt. They were opportunistic after the global financial crisis, and those partnerships have a significantly lower return than the types of private debt that we invest in now. Taking a look at page 3, you can see the overview for the private debt program. There are 9 investments. You can see that there were a few made in 2016, and then not many in 2017. And then we've started to ramp up the program along with staff since that time period. I would skip ahead to page 5. I'm sorry, page 6, to take a look at the individual partnerships in the private debt portfolio. So you can see the 3 that occurred in 2010 that I mentioned were later sort of wrapped into the private debt program, had pretty low IRRs, 4.7 for GSO, 2.9 for Medley, and 2.5 for White Oak. Those were invested in under a prior staff and board. You can see that since we started ramping up the program again in 2016, specifically Aeromark in 2017 has a 12.9% IRR, nearly double the peer IRR. And then we have recent investments made from 2018 through 2020, which have returns which are not yet meaningful, but 2 of the 3 have returns over what you've paid in so far. The next section is the real assets program. Taking a look at page 8, you can see that there were a couple of commitments made in 2016, some in 2017 and some in 2019. And we can take a look at those individual partnerships on page 11. Global Infrastructure Partners 3 was committed to in 2016. We worked with staff to do another commitment to that fund in 2019. You can see Lime Rock and Kimmeridge were in 2017 and 2019. Overall, this portfolio is very young, having been around for just a few years, and private markets do take some time to realize investments. So we will continue to monitor and present to you the performance going forward. The next section is the real estate program, which starts on page 13. You can see that there are 14 investments in the real estate program. There were a few vintage years where nothing was committed, but starting in 2019, there's been more regular commitments, and those individual funds are shown on page 16. You can see that for the most part, the real estate funds have done quite well and outperformed the peer IRR, in particular the DRA funds, which you can see DRA has been in the program since 2005, have done quite well. I'm happy to answer any questions, but we expect to come back relatively soon with information through the end of the second quarter.
Okay. Questions, comments by board members?
It's tough to ask questions about Q1.
I know. We don't want to talk about it anymore already.
I don't remember. Yeah, well, that's true. It's kind of like
we've all blocked it out.
Not a question. Yeah, that's true. But I can't remember what I ate for breakfast this morning, much less March. So fair enough.
Trustee Horowitz,
yes.
I do have one question.
Sure.
Going back to the first slide.
Okay.
And the for the NB fund of 1, the PME IRR is negative 13.2. What is that based on? What is the benchmark there?
I believe it's the S&P. I think. Let's see. Let me confirm here. It is for private equity, the global, the MSCI All Country World Index, Investable Market Index.
That looked so awful because it was the end of Q1.
Yes, that's part of it. So the PME is calculated such that it assumes that every contribution into the program happened on that same day into the benchmark. So there's a lot of potential timing effects there.
Right. Well, I look forward to the Q2 numbers, which will obviously flip that around considerably.
Yeah, the good news is the Neuberger Berman IRR, significantly outperformed what you would have gotten in the public markets with those same contributions and distributions.
Thank you.
Mhm.
Other questions, comments? Okay, hearing none. Laura, thank you very much for joining us. Appreciate it. Mr. Palani,
Yes, thank you, Mr. Chairman. And so for 3D, I'm going to take the baton from Ms. Wyrick and hand it back to her for Q2 performance report.
okay.
All right, thank you. So we have the quarterly review for the quarter ended June 30th, a little bit more recent, still not quite the most recent quarter end, but if you take a look at page 4, you can see the huge rebound in markets through the end of June, starting at the beginning of April. The riskier asset classes like the Russell 2000, which is small cap equities were up 25%. I think not every small cap manager was up that much, but especially those that invested in biotech in some areas that had been in favor recently had quite a good quarter. The theme in the market during the second quarter tended to be what pandemic, even though obviously we still see high unemployment and some other negative effects and ongoing uncertainty. If you take a look at page 5, you can see the trailing returns. If you look at the 1 year, which of course is Federated's full fiscal year, you can see a pretty positive return for most asset classes. However, there were some big differences. For example, the Russell 1000 Growth, which is large cap growth companies, many tech names that many of you are very familiar with, was up 23% for the 1 year period, whereas small cap value was down 17.5%. So there were some pretty big gulfs based on capitalization and style. I won't go through the rest of the market update here, given that it's a bit outdated. But as I mentioned, we do see, a bit of a disconnect, as we all know, between stock market and financial market returns and the actual economic fundamentals right now. There's uncertainty going into the US election, which is difficult to handicap. And then there's, I think, a lot of belief that the government and the US Federal Reserve will do whatever they need to do to prop up markets. So there's definitely some positive sentiment around that. Getting into your actual plan on page 22, you can see the new policy allocation that was adopted in March. The 2 San Jose plans driven by your staff in sort of concert with the consultants, made an incredibly well-timed strategic decision to increase the equity allocation in your plan. If you take a look, there's now 75% target to growth assets like public equity, private markets, emerging market debt, and high yield bonds, a lower allocation than you've historically had in low beta, and 17% to other, which includes things like investment grade bonds. So overall, the plan is currently very close to its targets. On page 23, you can see recent returns through June 30th, a phenomenal quarter. Just in the 3-month period, the plan was up 11.1% for the second quarter of 2020. That brought the year-to-date return to barely negative, down 1%. And the fiscal year, the full fiscal year, while it didn't meet the 6 3/4 assumed rate of return, given that we went through a major global pandemic and a huge bear market with a 34% drop, the fact that there was a positive return of 3.6%, more than half of your assumed rate of return for the 1 year period, was really, I would say, pretty unexpected and phenomenal. And then if you take a look at the peer medians, that's sort of in italics about middle of the page, you can see that the Federated plan was in the first percentile of the peer group for the year-to-date period. So you had the first quarter where you had really hugely negative returns for all asset classes, and then you had the second quarter where you had hugely positive returns, and the Federated plan was the best plan in the entire peer group, which is over 70 public pension funds with assets of over $1 billion. So, really, governance process that you have now that allowed that pivot at the right time. And that brings the fiscal year to the 14th percentile of the peer group. And then the quarter, certainly well kept up with global markets with a return that ranked in the 29th percentile of the peer group. And I could go through individual asset class returns, but for the most part, the theme was the riskier the asset class, the more it was down in the first quarter and the more it was up in the second quarter. And all of the systems managers are performing as we would expect. So I was just going to skip to page 42 to point out that, we have some of these slides at the back in every report. We don't always focus on them, but I think it's worth pointing out that there was 903 million in contributions during the second quarter, 916 million in withdrawals. So pretty even in terms of contributions and withdrawals. But the plan was up $224 million just from investment returns alone during the quarter. Then I was also going to skip to page 49 to point out that the return of the plan was 3.6% for the 1 year trailing period for the fiscal year. That was 3 times or nearly 3 times the peer median of 1.3%. And then, another metric that we want to look at is risk. How did the plan's risk compare? Did you get that return by taking on a lot more risk than the peer group? And the answer is no. The risk level was 11.2, the standard deviation or volatility, whereas the peer median risk level was 12.1. So you had a higher return, you had a lower risk, and that brings the Sharpe ratio, which is the third column, a measure of risk-adjusted return, to outperforming the peer group and ranking, very close to the top. So we have a lot of other analysis in here, which I'm happy to talk about. Pages 54 and 55 look a little bit more at the peer relative returns and asset allocation. So we never want to focus too much on peers because we know that San Jose's retirement system for Federated is unique. The metrics of the city and characteristics of the city are unique. But I do think, the governance process, the staff that you have in place, the current board that made decisions quickly, it is worth noting how well the plan did for the fiscal year and the year-to-date period. So I'm happy to take any questions on the pension, and then Jared was going to walk us through the healthcare report.
Okay, thank you again. Laura, questions, comments by board members?
I have a basic question.
Sure.
Yes, Trustee Jennings.
It's just that I don't understand it, so. That last page you were on, where you had
39, I think.
Yeah, that one. So can you just explain a little bit more about how the returns, no, it was the one you were, I don't know, 54 or something. Yeah, that guy. So the rate of returns, you have 1 year, 3 year, 5 year, 10 year. Is that a projection out based on what we have, or is that our rate of return over the last 10 years?
Yeah, good question, because when we talk about asset allocation, that's always a forward-looking projection. These are actual returns in this report. So this is how the plan has done over the 10-year period. One, big thing driving that peer relative underperformance for 10 years is that there was a time period where there was a belief among the staff and perhaps the board as well, prior individuals, that the markets were overvalued and that, we needed to be conservative. And so there was an overweight to cash, even sort of beyond what the target range was to be conservative. And, there's lots of dynamics that sort of went into that, maybe around the city council wanting the board to be cautious following the global financial crisis and losses there. But there was a time period where, a lot less risk was taken on by the plan. And there was a very large allocation to hedge funds, which were not additive historically.
Okay, so the 10-year of, the total fund aggregate is 5.5. Is that Federated number?
Yes. So Federated's average annual return was approximately 5.5% per year for each of the last 10 years. So, they average out over time some years. So that means about half the time the returns have been better and half worse.
And that's with a very conservative approach towards cash.
Yes, and you can see the investable benchmark portfolio. The system actually, the federated system returned 5.5%. The benchmark portfolio returned 5.4%. So there wasn't really a problem with execution. It was more around asset allocation and sort of the policy at the time.
So given our latest allocation, given where we are and how we position ourselves, it's reasonable to expect that in the next 10, again, it's a forecast, but in the next 10 years, we would outperform that 5.5%.
Yes, the asset allocation that's in place now has a long-term assumed rate of return that's above the actuarial target rate of return of 6.75%.
Thank you very much.
Sure.
Other questions, comments, reactions? Okay, Jared, I think you're up.
Thank you, and hi, everybody. I look forward
Hi.
to working with you all. Pull up the healthcare trust here. So let's cover this real quick. At the end of June, the healthcare trust had just over 300 million. That was up 30 million from the end of March. You can see that the asset allocation is in line with policy here. For some context, when comparing this to other healthcare plans or to the pension, this has a slightly more aggressive allocation than many healthcare plans. But at the same time, it's much more conservatively positioned than the pension plan. So just kind of helpful to keep in mind when looking at performance. Here we can get into the actual performance at the end of June. So maybe focusing on the fiscal year first, basically flat, down 0.1% for the full fiscal year as of the end of June. The second quarter we're looking at here, similar to the pension plan, extremely impressive absolute and relative returns, up 11%, which is obviously very strong for one quarter and well ahead of the peer median for the time. Some context around the peer ranks here at the end of June. It was a pretty turbulent market environment. And as I mentioned, this is more aggressively positioned than many healthcare trusts that you're comparing to. So if you look at these peer ranks at the end of December, at the end of a stronger equity market, peer ranks at the time were ahead of peer median for 1 and 3 year periods. So I think that explains why the ranks are good for the quarter and less so just at the end of this particular period. We also have returns estimates through this week. So just to kind of bring this up to date a little bit, again, it's an estimate, but our estimate for the third quarter is a positive 5% basically, which would bring the calendar year to date to essentially flat. And then the return so far through October is up another 2.5%. So the fiscal year to date estimate through this week for the current fiscal year is basically positive 8%. I guess similar to Laura, don't have to cover every asset class underlying investment, but unless Laura wants to add anything from a high level, or we can take any questions.
Yeah, thank you, Jared, for reminding me that I didn't provide an estimate for the pension fund. So we do have an estimate that the pension fund was up another 6% for the third quarter ended September 30th. And then for the beginning of October through Tuesday, we estimate an additional 2.6% positive return, which would bring the fiscal year to date, so for since June 30th through Tuesday, to 8.8%. So already sort of in those first few months of the year, outperforming the expected rate for the year.
Yeah, great. Questions, comments by board members? Okay.
None for me.
All right. Well, thank you very much, Laura, Jared, for joining us again today. Mr. Polani, anything else before we jump to the fee report?
Nothing from me, Mr. Chairman.
Okay.
Thank
All
you.
right. Thank you. Let's move on then to item 3F, presentation investment fee report for calendar year 2019 by the investment staff.
Thank you, Mr. Chairman. And this is a report that we present every year. annually to the boards and then subsequently to the city council. And we will be taking this to the council in a couple of weeks. But to present today, I have David and Dinesh.
Great. Thanks, Prabhu. Hi, everyone. So we'll be presenting our comprehensive fee report. There are two documents here. We'll be presenting the shorter presentation. There is the longer fee report with a lot more numbers in much more detailed breakdown. But you know, we like last year, we think it's kind of simpler to kind of focus on what we think is important and not to get bogged down with all the detail. So that being said, if you flip to page 2, Dinesh. So the headline number is fees came down from last year and has been coming down for the last couple of years. Top line fee came down from 1.17 to 1.07%. Primarily driven by decline in management fees and also a slight decline in incentive fees. In terms of peer comparison, unfortunately, by the time we put this together, the database that we usually source hadn't been updated, and a good majority of managers that we consider peer had blank numbers in the database. So we will update this when it becomes available. If you go to the next page, this is just putting the previous percentages into dollars, so that roughly 10 basis point decline in fees translates to roughly about, call it 3 million in fee savings. Again, primarily driven by the 1.8 million in management fees that we saved. Next page. And again, emphasizing the message from last year, and I think going to be the continuing message in this fee report is, we should focus on what we can control, and that is essentially management fees. If you remember, the three components: management fees, incentive fees, and operating. Incentive fees are a function of investment performance, which obviously we cannot control, and then technically, you wouldn't mind paying high incentive fees because that would indicate that you are generating better investment performance. So as a result, we want to focus on management fees, and management fees have come down for the past 4 years, to the tune of about 18 basis points or 2.2 million. If you go to the next page. And so, we focus on kind of active management fees. So you can see, the contribution to management fees from passive is very small, about 2 basis points, and the active is the one kind of driving most of the management fees. We have been able to increase our weight to passive strategies throughout the plan. Just a note, I don't think it's necessarily an objective to get more passive throughout the plan, but I think we tend to try and spend our outperformance alpha budget where we think it's most efficient, and so we tend to get passive in areas where we consider the markets to be more efficient, and get more active in areas where we think we have a competitive advantage. Going to page 6, or the next page, sorry. You can see where that 63 basis points of active management fees have come from. The bulk of it is coming from kind of private strategies, but one thing to note here is the reduction in kind of the hedged component, which is a function of actively getting rid of more expensive hedge fund-like strategies in areas such as public equity, as well as reduction in kind of market neutral strategy allocation as a result of the strategic asset allocation shift last year. And not only have we reduced the allocation to hedge strategies, we've also kind of reduce the management fee that we are paying for these hedge strategies. So I think a lot of the benefits we're seeing from a lot of the reduction in the management fee has been driven by a reduction to our exposure in hedge fund like strategies. So that's pretty much it. I mean, the top line was just, fees have come down. I think we expect this to be kind of the level where fees, we expect management fees to be. I mean, it kind of fluctuates a little bit between kind of, our desire as we see more opportunities to get active in certain asset classes. So with that, I can open up to questions if anyone has any questions.
Is it realistic to anticipate there will be another line of questioning about passive versus active, especially at that slide 5, it shows how low the fees are for the passive. Are we going to invest some education or information on the value of active management and the cost benefit of it? I mean, it just seems that continues to come up, and in public session in a couple of weeks, it just seems like it would be hard for that not to come up to the extent anyone is watching it, but they're not being actively monitoring the work of the boards and the staff.
Yeah, Mr. Chairman, let me answer that. Yes, so yeah, we do take fees very seriously. We take costs very seriously. Our goal is, of course, to maximize after fee returns. And so we're very focused on that. We do know that our stakeholders take a look at fees. And so it's a combination of, from our end, trying to reduce fees where we can, and also education, right? It's twofold. So there's ongoing education and there's ongoing information that we can present. I believe last year at the Retirement Working Group, one of the meetings with some city council members, we did present charts that showed the fees that we paid to active managers and compared it to the value that they've added over benchmarks. And it is my desire to continue to gather that information and to present it to the boards. So that's something that we will do on an ongoing basis.
And I've seen that. I know we've talked about it at the board level. I've sat in on the Retirement Stakeholders Working Group. I know you've done it there. You did mention you're going to be presenting the fee report to the full council. That's a whole different forum. The information you've provided to us, I guess I'm suggesting or asking, what are we not planning to show that to the council on the fee report presentation in a couple of weeks? That seems, I mean, I've seen it before. I do get a sense. My personal opinion is that it is worth the fees. The performance net of fees is good. It's positive. I've just not seen that in this presentation, and I'm going to guess that it's going to come up again at
Yeah.
Council.
Yeah, it well may, and I will have the data with me. And this is the reason we are following this format is this is the format that I used with the city council last year, and it seemed to go down well with council members. And I was going to use the same format, but I will have those numbers handy. The value added by active managers.
Okay.
This is a trustee, so I have a question. How does
Yeah.
our fee compare with with Police and Fire?
Sorry. Yes. Hi. Hi. This is David. So federated fees are a bit lower, and I think and I think partly is I think the private equity allocation a little bit. I think Federated has currently a larger allocation to Russell 3000 right now versus PNF.
So in terms of actual numbers, what's their fee rate for, let's just say 2019? Or maybe you can actually send that.
I'm sorry, I can't hear you.
Oh, sorry. So how, in terms of the real numbers, what's the police and fire fee rate for 2019? Actually, I have a better idea. I wonder if you can just share the similar analysis for federated to no, for police and fire with a federated board.
Sure, no problem.
Thank you.
And just to add, the actual police and fire number is 1.23% for calendar year 2019.
All right, thank you.
Okay, other questions, comments? Yeah, Trustee Horowitz.
Trustee Horowitz, I have a couple of questions.
Yes.
So this is showing up to 2019. Is that the fiscal year just ended in June, or the fiscal year that ended a year ago, June?
No, this is actually calendar year that ended in 2019.
And I would actually like to take a look at the second detailed presentation. I have a couple of questions on that.
Sure.
If we could go to, I believe it's slide 5. No, keep going. I think, go back, I guess slide 6.
Yes.
Trustee Horowitz, yeah.
So this is showing the fee ratio management fees. So under private markets, we have a passive allocation. Is that the Russell 3000 funds that are waiting for deployment?
Yes.
Okay, so as we execute on our pacing plan, can we anticipate that the private markets fee ratio will actually increase in the coming years, both for private equity and for venture capital?
Yes, I believe that's true.
I see. And then under the public equity markets, and this is kind of a follow-on, I guess, to some of the questions Chair Castellano and Trustee Sun were asking, we still have a fairly significant number, fairly significant allocation to funds that use an active approach and have consequently much higher management fees. Can you describe a little bit further where we are using the active approach and suffering these fees?
Sure. So I think primarily most of the active funds are in emerging market and international. And we also have global as well in terms of artisan. So I think in the US is primarily passive.
I guess I would be very interested to know and to see evidence that our employment of active management was actually producing alpha that justified these extra fees, even in emerging markets and certainly in international developed markets, where I think international developed markets have a very similar cost trade-off with respect to fees and active management, as does the domestic market.
Yes, Trustee Horowitz, yes, we can share that information. We have started gathering that data and we can share that information. In fact, one of our best performing managers is actually in international equity, Artisan Partners, who've actually added significant value over the fees that we pay. But I'm happy to share that analysis. But I also want to make another comment, an overall comment, is that fees are driven by asset allocation, right? It's not just the active versus passive deployment. And that's something that the boards control. And so I want you to keep that in mind. If we have an allocation to, and I've stressed this to the city council as well, if we have an allocation to private markets, we are going to pay fees. There's no way around it. And in terms of within public markets, we certainly have the choice to be passive or active. And I think the evidence shows very clearly, at least since the time that we've gathered the data, that our active managers as a group have performed significantly better and generated millions of dollars over the fees that we've paid. And that updated report, I am happy to present to the boards and the city council at some point.
Thank you. I would be very interested in seeing that. And I'm very encouraged that we've brought the fee structure down over the last several years. But as you say, the asset allocation, which is at the discretion of the board, by investing in private markets, we inevitably will have a higher fee structure once those assets are deployed. So I think I anticipate the reduction of recent years to plateau and perhaps increase.
That would be a fair observation. We have made an effort to cut down on our allocation to hedge funds, and there'll be some additional fee savings in the next year or two as they wind down, but they will be offset to some extent by increased allocation to private markets.
And one thing I might add in terms of some of these private market fees as how they're displayed, you know, when you do have kind of strategies or funds that are ramping up, excuse me, the way we represent the fees is as a percentage of kind of NAV, and a lot of private assets, it's paid in terms of committed. And so early on in the life, the fee ratio might seem a little elevated, but will come down as more assets get deployed.
Okay, thank you for explaining that wrinkle.
Mr. Chair, if I may, if I can make a quick comment.
Yes, thank you.
I just, because I think well, first of all, let me just say thank you to the staff for putting this information together. I just don't want the board and the stakeholders in general to lose sight of the fact that this is a very, very robust and comprehensive report. We believe wholeheartedly on the transparency, and I just, I think this report has so much information and data that it allows us and the board to really understand where the fees are coming from and to ask questions. But I don't want you to forget there's only a handful of plans across the state and nationwide that actually produce this kind of report. So again, I just want to make that statement publicly, and also thank the staff for the work. And we're very proud of the report and the data that we provide, and we seek to actually improve the information every year. And I think I'm going to echo the words by our CIO, Prabhu Palani, and the request of the board. We are continuing doing more work, and we will come forward with information in terms of the passive versus active approach and what is the cost benefit. But in closing, I just want to emphasize the statement by Prabhu, which is besides the active and passive equation, for the most part, the total fees are going to be driven by the asset allocation. So thank you, Mr. Chair.
Okay, yeah, I appreciate the comments. And I agree, staff should be commended for the work. And I also agree that, yeah, this is a great report that's being prepared and shared with all the stakeholders. I think, as I alluded to earlier, and I think Trustee Horowitz's line of questioning is easy to anticipate. It's reasonable. And so to the extent we can provide something that gets in front of it, I think that's worth the investment. If it's coming up from the board, who sees this information more regularly than other forums, then I think again, it's reasonable to expect that it'll come up again. So if you've got the information, I think we ought to. I would suggest you get out in front of it by sharing it, so that it's easier to explain and get past.
Fair enough. Will do. Thank you, Mr. Chair.
Other questions, comments by board members?
Jay, I just feel since I'm chair of the investment committee, I'm not saying anything new, but it might be valuable since we're in open session. I really strongly agree with what Roberto said and what you've said. I think this is an excellent report, and I think it's unique. Most other pension plans are not taking the deep dive into really understanding their fees, and it's been helpful. And you know, I appreciate all the questions that it elicits because that's why we do this. We want the transparency. And sorry for repeating what the two of you said. I just thought it was worth underscoring.
Yeah, no, thank you. Thank you very much. Appreciate that. Okay. Shall we move on then to item 3G, discussion and approval for the secretary to negotiate and execute a 2-year extension of the agreement with Bloomberg Finance LP for $150,000 per year, shared 50-50 with police and fire plan.
Thank you, Mr. Chairman. I'm actually going to ask Mr. Kumar to talk about this item. And I do want to mention, you know, I know the board's been getting some of these fee requests piecemeal this year. And so we have made a decision to, you know, to bring it to the board next year in one document. So you can see all fees just in one document. It'll be easier to look at all the fees and you know, we pay not just fees, I mean expenses for tools and so on. And of course, these amounts have already been approved in the budget process. It's just that Bloomberg fell on a different cycle and different time in terms of the calendar. And that's why we are bringing this to you at this point. With that, I'm going to turn this over to Mr. Kumar.
Good afternoon, everyone. And one of the things also I'm trying to do is try to get all the contracts to be due on June 30th. So it's taking me a few years to get there, and eventually we'll get there. This request is just for renewal of the contract of Bloomberg. Staff uses it for research purposes, and we currently have 6 licenses, and we recommend to renew it for 2 years at $150 a year, which is shared with police and fire plan, which comes out to $75,000 per plan. With that, I'll take any questions you might have.
Okay, any questions from the board? So,
this is Trustee Sung, sorry.
Yes.
I don't have a question. I have a kind of outreach question to the retirement services. So, the city administration also have Bloomberg terminals. We have 3 here. I know you guys have 6. Is your kind of get some feedback to see if there's any interest to combine our procurement to see if we can get some economy of scale down the road? I'm not saying right now, I'm just throwing this idea out.
I recall we looked into that back in 2009 when we initially signed up with Bloomberg, and I believe there was a concession that was given to both plans, but I haven't been involved in that in a long time. So that was 2009, about 11 years ago.
So it's a good point you raised, Trustee Sun, and we will certainly take a look at that.
Yeah, okay, I'll take this offline. I have a meeting with Bloomberg rep next week. I'll ask them and I send you my feedback. Yeah, because our fees are kind
Sounds
of
good.
similar.
Thank you.
Yeah, great.
We appreciate it. Thank you.
Okay. So the recommendation is discussion and approval for the secretary to negotiate and execute a 2-year extension of the agreement with Bloomberg Finance LP for $150,000 per year, share 50-50 with the police and fire plan. Can I have a motion and a second?
Motion to accept.
Motion by Trustee Jennings, a second.
I'll second the motion.
Second, or Trustee Kelleher can too.
I'm sorry, second from Trustee Kelleher. Is that correct?
Yes, that's correct.
Okay, thank you very much. Any discussion from the board? Any public discussion? Okay, let's do a roll call vote. Vice Chair Chandra.
Aye.
Thank you. Trustee Horowitz.
Aye.
Thank you. Trustee Jennings.
Aye.
Thank you. Trustee Kelleher.
Aye.
Thank you. Trustee Orr.
Aye.
Thank you. And Trustee Sun.
Aye.
Thank you. I also vote aye. That motion carries unanimously.
Thank you.
Thank you, Ron, for that. Let's move on to item 4A, discussion on Tier 1 rehire amortization costs, implementation, and member statements.
Hi, everyone. I'm happy to introduce this item.
I apologize, Cheryl. I had no idea we had just jumped into the new item. So quickly before you kick off the conversation, Cheryl, I just wanted to remind the board, most of the trustees were not at the board at the time, but this is an item related to the costs associated with the rehire of Tier 1 employees. These are employees that they used to be part of this, the city, left, came back and joined the city under a Tier 2 benefit structure. And because they have prior Tier 1, the city worked out an arrangement with those members, the ability to actually buy back that time, or to actually pay back the difference between the benefit structure for Tier 2 and Tier 1. Did I explain that correctly, Cheryl?
Yes, absolutely. And if I could just add a little bit of color to
Sure.
it. And
Go ahead.
For everyone that doesn't know, I'm Cheryl Parkman. I work in the Office of Employee Relations. Our office was in charge of implementing Measure F, which was the counter measure to Measure B, where this is coming from. So apologies for coming here with a complicated issue today, but we do have some employees in the federated system, around 50 of them, who were previous Tier 1 members who left, came back as Tier 2, and then, as Roberto said, they were able to basically buy back their service into Tier 1. And what I'm here to talk about today is that previously these employees were being charged interest at the discount rate of 6.75% for that buyback amount. Now, we understood from some of these members, because of their annual reports, that some of them were actually not being able to pay off those balances because of that high interest rate. So I came to this board earlier in the summer with an ordinance that stopped the interest rate being adjusted of their balances. And I wanted to come back and report that that ordinance has been in effect. It started its effective date in September. And so wanted to provide the council with an update, or I'm sorry, the board on an update with that. But there's another reason why I'm here. And that second reason is because what happened with the Pension Gold system upgrade is that there's this really great new feature called the Member Direct portal. And within the Member Direct portal, these Tier 1 rehired employees can actually log in and view their outstanding balance, including interest. So the reason why I'm here today is to basically recommend to the board that instead of doing an annual paper mail statement to these Tier 1 members, we actually direct them to use that Member Direct portal so they can view in real time what their balances are. So every pay period, these portals are going to be updated with the most correct and up-to-date information. And I wanted to also give an update of what happened at the Police and Fire Board when I made this same request at their September meeting. The request was that we continue the annual statements for another year, just so that the employees have a baseline of what's going on. And then we continue to direct them to that Member Direct portal on an ongoing basis. So just one more annual paper statement that's mailed to them, and then communicate that from now on, they will be directed to that Member Direct portal for more up-to-date information. So I'll recap. The reason I'm here today is just to give the board an update that we did implement the ordinance that does terminate the interest on a forward basis for these rehired Tier 1 members. And then also that we're here to ask to not do an annual statement anymore, but instead do just one more annual statement and direct these employees to the Member Direct portal on the website. So that's why I'm here. I'm happy to answer any questions. Again, I know it's complicated and I apologize. I know this is a difficult subject, but please let me know if there's anything I can clarify.
Hi, Cheryl. Thanks for joining us today. Hey, so follow-up question. they will continue to get something mailed to them every year. It's just that instead of the numbers being on the statement that's being mailed, the future mailing will refer them to the member direct.
That's correct. So every year, the Office of Retirement Services mails every employee their annual statement. And so that's just an annual statement of what service they've accrued over the previous year of service. We were mailing out a separate annual statement to these specific Tier 1 rehired employees with a balance. But just with, a lot of things, it was already out of date by the time that they had received it. So we want to just provide them with more up-to-date information rather than something that's already not going to be correct.
Right. So they'll get the note. They'll get the notification that Member Direct has the updated information, and they'll get that with their annual statement instead of a separate mailer.
Jay, maybe I could, Cheryl, would you mind if I address that question?
Yeah,
Please, Barbara, I'd be very.
My concern is that we can't. Doesn't seem like we can yet go paperless on it. If they're going to, for the people who are not online all the time, how do they know that information is being updated over there after this one-time notification?
So I think what we can do is, as you've alluded to, Jay, we do send out, and you as well, Cheryl, we do send out an annual member statement. And what we can actually do now is incorporate as of, in February for the prior year. So in February 2021, for the prior year, January to December 2020, we can include like a summary of the same information that is on Member Direct. So they'll have a balance, what they paid, of course there's the interest, and then the remaining balance. We can put that onto the annual statement that goes out. Now for Member Direct, as Cheryl said, after every transmittal comes in, that will reflect the real-time balance. Just because of the nature of, we'll have received some payments and that simple mathematical equation will be done. And then they can see how much they owe after every single pay period and what the balance is remaining.
Yeah, I'm not asking about having numbers on the annual statement, rather, like my credit card thing, right? I mean, the most update numbers are online, but I get an email every month that says, here's what the statement is. Here's where the statement is. Click and go over there for the numbers. I'm just looking for something that will prompt these former tier one people. What will tell them that the information is there online? Remind them it's there online. They can access it real time numbers at any time. If we send a notice to them, with this next statement, and then we never send it to them again, then, what will prompt them to know that that's still a resource with them?
Jay, let me address that quickly. So just to give a background, first of all, I just want to make clear that this really just reference, I wouldn't call it a handful of members, but we're talking a very small numbers, right? The annual member statement goes out to thousands of members for both police and fire and federated.
I understand that.
These number of people, Barbara and Cheryl, correct me because I get confused between police and fire and federated, but it's probably less than, I think it's 20 to 30 people. Is that correct?
It's probably more around 40 to 50,
40 to 50?
federated members, and then just 10
police
to
and
12
fire.
police fire members. But I think Roberto's point is correct in that it's a small fraction of the full federated membership. And I'd like to answer your question a little bit further, Jay, and say that, Barbara and I have talked about a separate communication plan to these members so that they would not only be informed through, this next annual statement to look at their Member Direct, but we're going to do targeted communication to them so that they know that this is where we'd like them to go to view the most updated numbers. So specifically through email and through other means, and then have us both as contacts in case they have any further questions about how they can access the portal, going forward.
Thank you, Cheryl. I just, that was the next step, the next explanation I was going to make, Jay, and
Yeah.
Shirley just explained it. So we haven't really quite finalized how we're going to be reaching out to them, but we completely agree with you. We want to let them know how they can reach out to us and how we can keep them posted and up to date on the information and how they can access the information, at their leisure. So we will certainly do that and report back to the board what we did.
Okay, yeah. I mean, we have some employees being impacted. The information is going online. That's great. I think that's a good thing. It's just that we can't do a one-time notification for something that's going to be on there on an ongoing basis. So, that's what I wasn't hearing is the ongoing plan to remind them in some form rather than send them a one-time notification. We're going online, and then we never send them anything else about it. So Cheryl, what you need an action from the board on this one?
Yeah, I think I just need what we did with the police and fire board is that we asked the board to direct staff to work with the Office of Employee Relations on this particular item, so that it's just more a direction to staff rather than an action that the board needs to take.
Okay.
That's correct, Mr. Chairman.
Okay, very good. And I think you have that now, right? Are we good on this?
By saying that, I think that we'll take that as action and move forward, Jay.
We do. We work with the city and make sure and then report back to the board. Thank you, Mr. Chair.
Yep, very good. Thank you. Thank you, Cheryl.
Thank you so much.
Yes.
Thank you, Cheryl.
Item 5A, new business oral update from the CEO of Retirement Services, Mr. Pena.
Thank you, Mr. Chair. So quickly, if you bear with me, just give me a couple of minutes. As you know, we had your board retreat last month, so I didn't get a chance to update you. And so this update really sort of comprised the last 2 months. But let me start by indicating there are 2 positions in your 7 board member seat that are coming up for reappointment. One is the retiree seat, currently occupied by new chair. That application process actually ended on September 25th. There were 2 applicants, and because there were 2 applicants, there will be no election. A couple of years back, hopefully Cheryl is still listening to the meeting, if I'm mistaken, the city changed the process whenever there were less than 3 applicants. Rather than going through an actual election process, they go through a new process, which is they will go directly through to an interview of a panel, which is comprised of different personnel from the city, from the unions, and from the retiree association. And that panel will interview both applicants, and then they will make a recommendation for appointment to the city council. And the city council then will entertain that recommendation, hopefully in time for your December board meeting. The other seat that is coming up for reappointment is seat number 7. And the reason seat number 7 is important and right now is occupied by Trustee Horowitz is because it's the one seat in your board that really does not go directly to the city council for interview. The way it works is that, by the way, we did receive 2 applications. That deadline actually closes later this month on October 25th. At this point, we have 2 applicants, and your board is charged with the responsibility of interviewing the applicants in public, and then based on that interview process, make a selection to recommend to the city council. So what that means is that your board meeting next month would include an interview of the 2 applicants so that your board can decide which applicant you will be recommending to the city council for appointment. And again, the city council will entertain that recommendation in time for your December board meeting. So those are the first 2 items. Any questions on those 2?
Yes, I actually have a question.
Yes, sir.
My original appointment was by the city council and not by action of the board. I believe trustee Kelleher was appointed by action of the board. So has that,
That's interesting. Hold on. So, Linda, can I bother you there for a second? Can you, are you listening?
Yes.
So can you please, I mean, that's true what Trustee Horowitz is indicating. I remember him being interviewed by the city council. So which seat is the one that is open for November?
Trustee Horowitz.
So it's not the 7th city, it's not the one for interview.
I'll double check with the clerk, but that's the information I get from the clerk.
Okay, so Trustee Horowitz, we will certainly get back to you. It
Yes.
seems that we have received conflicting information from the city clerk. So we'll clear that up with the city clerk and get back to you. But you are correct. And I do remember vividly listening to your responses, watching the city council meeting. So let us look into that and get back to you.
okay, thank you.
Very
It's not possible that the selection process changed for whichever seat that I'm applying for.
No, that is not correct. So you should be applying for the same seat that you were appointed to. So we're gonna need to check and get back to you. Apologies for that. Thank you for bringing that up. Much appreciated.
Thank you.
Also wanted to let you know that you may recall that we were purchasing new iPads for all of you. And in order to receive the new iPad, you will be receiving an email from our staff with an equipment a checkout form that you will have to fill out and send that back to the staff, so then we can actually mail you your new iPad through UPS. But you must retain your old iPad to us before we send you the new iPad. So again, you should be receiving an email with that checkout form and any other kind of information you will need for this process. I also wanted to let you know there is a CalPERS, which is the California Association of Public Retirement Systems, is offering a virtual trustee roundtable training that's going to happen not tomorrow, but the following Friday on the 23rd. I believe you may have received emails from Linda on that. Also wanted to let you know that, remind you that tomorrow is your joint meeting with Police and Fire and the City Council. You should be, you probably receive an invitation today while you are sitting for this meeting from the city. It's a Zoom meeting. It's the City Council, Police and Fire, and Federated. The meeting is currently scheduled for 3 hours, 9 to 12. I suspect if you can, plan on the 3 hours. I think there are going to be many questions. The meeting is going to be kicked off with presentations from the city standpoint on the COVID implications to their budget. And I think some additional information on having that COVID impact to their budget and what steps the city may want to consider to address those implications. So there are 2 presentations on that. There's also going to be a presentation on the COVID impact to the investment plans. And then that's going to be presented by Prabhu, but we're going to have Mikita and Verus also attending the meeting. We also are going to have your actuary, Bill Hallmark from Chiron, with a presentation on the implications of COVID-19 to, number one, the funded status of the plans, but also potential implications to future contribution to the plan sponsor. And then we close out the meeting with a question posed to the boards by the City Council on the diversity and inclusion of our staff and boards consultants. And so we have provided some documentation to the City Council on that. I'm prepared to make some statements, but those are the three general items, and I do expect a lot of participation. So if you can, please plan for the 3-hour meeting. I also want to let you know that you may recall some time back the mayor had created a retirement working solution group that was meeting on a monthly basis, of which besides UCIO, Pro Palani, and I are members of the committee. 2 of your Fed board are also committee members, and 2 police and fire from the Fed is your chair, Jay Castellano, and also trustee Elaine Orr. We stopped the meetings because of the pandemic, but we kicked it off again, and we started this past Tuesday. Very, very good meeting, almost 2 hours, and a lot of good information. And so just wanted to let you know. Also wanted to let you know that open enrollment for the retiree healthcare is taking place this month on November 1st to the 30th. Usually open enrollment known is very active, but we do have a day where we have medical advisors and we have members coming to the office, and we also provide free shots and everything. Of course, because of the pandemic, we're not doing that this year. So the full open enrollment is going to be virtually conducted from the 1st to the 30th, and it's really kick off with a pamphlet and a packet of information that we issue every year to members, and that packet should be going out in the next couple of weeks in anticipation to the November 1st date. Also wanted to let you know that Barbara and I participated at a Retiree Association Zoom meeting last week, and we had a chance to meet many of the members that asked questions. It was a Zoom presentation. We spoke about how the COVID-19 has impacted our operations currently. We had a chance also to speak basically on what to be expecting from the open enrollment and the virtual. And lastly, provided some very basic data on the actual evaluation. To that extent, I want to let you know that Bill Hallmark and Kyron will start coming back before you in November with the actual evaluation presentations and discussion. And that usually is about a 3 or 4 month step. So they start in November, and he's going to be coming before you every month through probably January for both valuations, the one for the pension plan and the one for the healthcare. You heard Prabhu and staff present the investment expenses report. Prabhu indicated to you we're going to be going to the City Council to present the item. Right now, we're scheduled to present to the City Council at their October 27th meeting. And lastly, I wanted to let you know we are working on 2 searches for 2 positions in the office. One is the Senior Internal Auditor. We will keep you posted on that. And the second one is, unfortunately, with the open enrollment for healthcare coming up next month, our senior benefit analyst in charge of the healthcare area actually left earlier this month. So we kicked off the senior benefit analyst search for that position this month. And again, I will keep you posted as we go through the process. So, Mr. Chair, thank you for the time, and I'm happy to entertain any questions that you may have, and the board may have for me. Thank you.
Okay. It's 12:59. Are there any questions to tackle in the 1 minute? Councilmember Davis, thank you very much for joining. Welcome. I'm sorry. Would you like to start now, or should we wait the 5 minutes?
I probably only have 1 minute of comments, so it was just to mention that we did have the Retirement Solutions Working Group, as Roberto talked about, and the item that was discussed is pension obligation bonds. There appears to be some interest in pursuing that, at least the first step of that, which is called validation. And I believe the mayor indicated that he is going to put a memo forward to the full council to consider that. There's a budget request that will be attached to that. So we are continuing to discuss that, and I would suggest that we further that discussion, not at this coming joint meeting, but the one more likely to be in the spring.
Great.
And that's it for my update.
Okay, thank you very much, Council Member. Appreciate your being with us again. Okay, Linda, with that, should we take the break right now?
Yes, Civic Center TV is waiting.
Okay, all right, very good. So we'll be back at 1:05. Thanks. Okay. Are we ready to resume? We have 6 board members back.
Mr. Chair,
Yes.
if I may, I apologize on my other report. While I was correct on mentioning that there are 2 members of the FED board at the Working Solution Group, there are 2 members representing new board. However, there are 3 trustees. We also have Julie Jennings. She is a member of the committee and she is a trustee of your board, but she's sitting in that committee representing as a member of her bargaining unit. So I wanted to make that clarification. She is a member of your board, but she's sitting as a participant of her bargaining unit, but she is part of the working group. So I didn't want to miss the opportunity to mention Trustee Jennings. So thank you, Mr. Chair, for allowing me to provide that.
Thank you for that clarification. Appreciate it. Okay. Let's resume. Oh, Trustee Jennings, you. Okay.
I was just, somehow I just hit Pandora, so I need to turn it off.
Okay. All right. 5C, discussion and action on CEO's compensation. Council, would you mind helping me kick this off? Is council on?
Okay, sure. So the board has been through with the Police and Fire Board an extensive and exhaustive process for evaluating, doing the annual evaluation for both the CEO and the CIO. Now is an opportunity for the board to discuss publicly, which is what's required, to publicly discuss whether or not, based upon the performance reviews and the quality of those reviews, whether for the CEO first, whether a change in compensation and or benefits within the guidelines established by the city or approved by the city council for these positions is appropriate. So now the board has not had any conversation yet about any change in compensation for the CEO or for that matter for the CIO. But now is the opportunity for the board, other interested parties, stakeholders, and members of the public to comment, make proposals, discuss potential changes in compensation based upon the performance reviews.
And if you could reiterate one more time what we cannot discuss right now.
Well, everything's fair game at this point. What we won't discuss is, I mean, other than the overall, because as I understand the city's MPP program, they have guidelines. I think those are attached to the materials, and they are keyed off of the conclusion of the, in this case, the 2 boards, evaluation and how they rate, whether it's outstanding or exceeds expectations or satisfactory. Those are tied in. So the board can certainly discuss the conclusion of the reviews for both of these positions in terms of where they would qualify the CEO and the CIO in the MPP program, and then within their bands, the compensation bands for step increases or other changes. So that's a long way of saying, rather, we won't be going into the details of their performance evaluations, which are not public, but the conclusion of the evaluations as to characterizing their performance for purposes of the MPP award guidelines is certainly fair to discuss in public.
Thank you, Council. The first item, 5C is the CEO compensation, 5D is the CIO compensation. Since I was involved in the CEO, in the drafting and of the CEO performance appraisal, I'll kick off that discussion on 5C. We did, as reported coming out of closed session, we did adopt the performance review as written, performance evaluation as written. It was a excellent review, excellent evaluation, and based on those discussions, based on what was done, past practice, what we did last year in a similar situation, and based on the memo that was part of the open session packet that demonstrates there is within the scale, the salary scale that's been approved for the CEO position classification, there is still capacity. There's still opportunity to increase the salary, even though our CEO has been here for 7 years, I think now. My recommendation, my motion would be to approve a 5% salary increase for the CEO. Do I have anyone willing to second that motion?
Excuse me, Chair, this is Trustee Sung. I thought the city guideline is a maximum at 2.5 for the salary increase.
So not that I'm intimate with that, but my understanding it's 2.5, and there is an opportunity for managers to recommend that it goes up to 5. It needs to be approved by the city manager, but it can go up to 5 with written request and approval. We don't have that process here. So for that reason, I'm suggesting we go directly to the 5 based on the evaluation we adopted earlier. And again, based on what occurred last year.
Okay, just to do the math, and someone can correct me if I'm wrong, but shouldn't we, I'm looking at the memo, okay, and in the memo, if you take the annual salary and the non-pensionable, because that's still money that he's getting, I don't know if the automobile allowance is part of the increase, and then add 5% to that, he would then still be within the range, because the range, I guess, went up, and so it's at almost 313. So 5% would still keep him in the salary range.
Mr. Chairman, we should have a second to the motion for discussion
Yeah.
purposes. at
I'll
least, if
second
there
the
is.
motion.
Okay, we have a second by Trustee Jennings.
All right, thank you.
Thank you, Council. Okay. Trustee Sun, did I answer your question?
I see where you're coming from, but I can't really see that from the memorandum issued by the city manager, David Sykes. So I don't know where the 5% allowance is at. But I'm not familiar with the management contract for the CEO and the CIO.
Yes, and I frankly, I don't have it in front of me either, but last year was 3% for the CEO, 5% for the CIO. There was a difference there in what we did in terms of salary. There was a difference also in the performance evaluation rating. There's not a difference this year. This year it is the same, and this would reflect past practice in that regard.
Oh, I don't recall. I thought we gave the CEO the maximum raise perform because I remember last year the city manager's guidance on a maximum performance merit increase was 3%. This year it fell to 2.5%. But I remember, but for the CIO, even though I didn't see the employment contract, and my understanding there is a different employment contract for the CIO position. If I remember correctly, the IC chair, Trustee Chandra, explained that in the CIO's contract, the maximum merit increase could be 5%. So that's just my memory.
Yeah, I'm not aware of that distinction. Can anyone shed light on that?
Mr. Chair, well, Prabhu can speak to his contract, but Prabhu, CIO, and myself contract, except for the name on the contract with both boards is exactly the same. And I think what you explained is correct. We, as a request, we provided the guidelines by the city manager. And those are the guidelines, and there's always flexibility when you are within the city structure. Any request beyond the 2.5% has to be approved by HR or the city manager. In terms of the CEO and CIO, I don't want to speak for the boards, but I believe that their approach last year was they are for the same flexibility. I said that in the case of the CIO and CEO, that actually goes to the boards, which you used last year as a reference to provide the 3% for the CEO and the 5% for the CIO. The only difference this year, as you indicated, is that it's 5% in both cases. So that just kind of explain what the guidelines is all about and the background information. So with that, I won't say anything else unless there are specific questions, but I'm not sure if Mr. Palani has any other comments.
That's my recollection also from last year.
And Mr. Chairman,
Yes.
also it would be relevant for the board to know that at the October Police and Fire meeting, that they approved a 5% salary increase for the CEO and the same for the CIO, so that you know what they're doing, because it takes both boards to agree on their compensation.
Yeah, thank you very much, Council.
And from what I'm hearing, because I understand where Trustee Sun is talking about, because as city employees, anything beyond the standard 2.5% has to go up the ranks. But because this is separate, this is retirement, and from what I'm hearing, they report to the board, both Federated and Police and Fire. We're the ones who get to make this choice, not the city manager. That's what I'm hearing.
Yes.
Okay, and I think that might answer your question, Trustee Sun, because I understand where you're coming from as a city employee. Okay, so we have a motion and a second.
We have a motion and we have a second. Other discussions by the board? Okay, any discussion by the public? All right, hearing none, let's do the roll call vote. Trustee Horowitz.
I vote to approve.
Thank you very much. Trustee Jennings.
Approve.
Thank you. Trustee Kelleher.
Aye.
Thank you. Trustee Orr.
Aye.
Thank you. Trustee Sun.
No.
I'm sorry, could you repeat that?
Negative.
I'm not sure. I'm sorry, the sound's not coming through for me. As I can't hear if it's a aye. Yes or no.
No.
Can anybody else hear that? For some reason, it's a yes.
No.
You said no.
Oh,
That
no.
was a no
Okay.
vote.
All right, thank you very much. I'm voting yes on that one. That motion carries 5-1. Moving on to item 5D, discussion action on CIO compensation. It is the same situation. We've adopted performance evaluations in closed session, and the same guidelines, same dynamics apply in this situation. Is there any discussion beforehand, or we're ready to move to a motion?
I do, can I bring up something?
Yes.
If we take the current salary plus the 5%, because that is part of the salary, and add 5%, it takes him outside the range, just by little, by about $200.
Yes.
So,
And my understanding, Councilman Mr. Pena can correct me, is that if it's $200 over the range, then that 200 is treated as a one-time bonus.
It is correct, but just a reminder, maybe maybe my memo is not quite clear. That 5% non-pensionable, like it is for everybody else at the city level, is not really part of the employee's salary range. So for example, if your salary range is from 100 to 120, and your salary is 110 plus $5 for non-pensionable, the salary that you have to consider within the range is 110. The 5% extra is not included in the salary range. So that's why, Trustee Jennings, that's why the total for the CIO is exceeding the limit by $200, but that's because, again, that 5% non-pensionable is not considered part of the salary range for the position, just like it is not considered for any other city employee. But you are correct. If it will be a situation where the increase will go over the limit, that extra amount, as Trustee Castellano indicated, will be considered a one-time payment. That was the case, but it's not the case in this situation.
So I have spent a little time on this one because this is kind of the stuff I do too. And
Yes.
I guess that's not my understanding, because I understand it's not part of the pensionable salary, and thus when someone retires, it will not be counted. However, this 5% non-pensionable will get an increase. It's not flat. It does,
Yes.
go up, and it is still your salary range. I mean, that's news to me. If that's the case, I would very much like to know that. That's not my understanding. My understanding is that it is just not what's counted to the pension when they retire.
So you are correct on your statement. I'm actually looking to see, unfortunately, Cheryl is not longer at
I
the
know,
meeting.
it's a shame, isn't it?
Yeah, and I'll text her, but
Yeah.
the way you explain it is correct. It is just that it's not considered pensionable for the determination of your final average salary when we're going to determine your retirement benefit. But let me, and I'm surprised because obviously you understand the budget from the city standpoint a lot better than I do.
Yeah.
So I'm starting to think that you may be correct, but let me explain it this way. You may
And I had to
recall-
argue that point because we brought a retiree back,
Uh-huh.
and HR was trying not to give them the non-pensionable pay, but that is part of their pay. I mean, we get that we got a 5% increase. And,
Yes,
and
it
we
is.
had to argue that to get them to recognize that that truly is part of their salary.
Yes, but I mean, I'm guessing that when you raise that issue as part of your discussion, you are correct completely. And this is why when I provided the memo, if you see, when I had the total salary or compensation at the bottom for the CEO and CIO, I included it because it's part of your salary.
Yeah.
But you recall, when they provided the 5% increase, the salary range did not move.
No,
Right?
because you didn't get a
And that-
COLA. if you get the COLA, you get the 3% COLA
That's
that
right.
the unions negotiated, then
That's
that increases the range. But no, the 5%, I don't know if the 5% increased the range. I think it did.
No,
I really think it did.
it did not. It did not. This is why
Okay.
in fact, Cheryl is joining now,
Okay, that would
which,
be,
you know, she can answer that question.
Okay.
But that's my understanding that that's the way it's supposed to work. And Cheryl is in. Cheryl, are you there?
Yes, if you could repeat the question, that would be very helpful for me.
Yeah. So the real question is whether the 5% non-pensionable pay is considered to be part of the salary range, or is that payment clearly is non-pensionable, is considered to be outside the salary range of an employee?
so let me say that one more time, Cheryl, because like I play this a lot, you know, as we hire people and look at this, is that, so in this case, if someone's making, you know, 280, all right, so in this, we can say numbers, right?
Yeah, they're public.
Yeah, they're
So
public.
why don't we put up on the screen the
Yeah.
memo so we have specific numbers?
Yeah,
And so-
we're talking specifically about Prabhu's.
Yeah, Rob, or
Cheryl.
Roberto's, either one. It's just that in Prabhu's case, if you take the pensionable and non-pensionable, add it together, take 5% of that, it goes $200 outside the salary range. And so Roberto is saying that the non-pensionable 5%, even though it gets the increase that everybody gets every year, whatever they get, it's not included, it's stripped out of the salary range, which is not as I understand it, but maybe I don't understand it right.
So if you look at our salary or our salary plan on the city's human resources website, that printed salary range does not include the 5% non-pensionable. So within all salary ranges, and in fact, when we're hiring new employees, we actually add an additional line in our offer letters that say that here's the salary range, but there is an additional 5% non-pensionable. It's almost like you can think about it like a 5% non-pensionable premium pay that's added to everybody's salary. So while it does, you know, every year, let's say, you know, the Unit 99 compensation summary would provide one with a 3% increase every year. That 5% is going to be included in that, but it's not part of the printed salary range that you see on HR's website.
So practically
hopefully that
speaking, what
answers
we're
your
talking about,
question.
what we're talking about here with Mr. Polani's situation is police and fire already approved 5%. According to Trustee Jennings' calculator, that would take his compensation $200 past the range. And so now I think the question is that 200 treated as a bonus, as a one-time, or is that $200 difference going to be treated as ongoing? I don't think it impacts the board's decision about whether or not to do the 5%, but I think there is a question about how it will be treated prospectively.
And I think what I hear Cheryl saying is that the 284,056, you add 5% to that, if that, you know, assuming that's what we give them, and then that stays within the salary range, and the non-pensionable is not inclusive of that salary range.
That is correct. That's the way I understood what you said.
Cheryl, that's what you said?
Yes, that's how we would apply it. So if the 5% would be added onto his, you know, stated pensionable salary range, that would be underneath the cap as it's currently posted.
So let me ask you this, just so I'm really clear. The 14,203, he gets a 5% increase. Does that go up 5%?
I believe that it would be applied to that as well. That's correct.
Yes, that's my understanding as well.
If that, I mean, I haven't done the math, so I can't speak to the correctness of the numbers, but the 5% pension will be impacted by any sort of wage increase. whether it's one given by the board or one that's
So they all go up, but it's the pensionable that is bracketed by the salary range. And also, when they got the 5% non-pensionable, that did not increase the range like a 3% COLA would.
That's correct.
Ah, okay. All right, well, I've just been educated.
All right.
Thank you.
Thank you, Cheryl. We appreciate
Cheryl,
it.
thank you for joining us again. Appreciate it.
Oh, absolutely. Thank you.
Can I ask a question since Cheryl is on the line?
Yes.
Yes.
Cheryl, this is Trustee Song. I'm just kind of confused with the city's policy on salary rates. That probably impacted my rating because we have a city manager's memo that's distributed to all the managers in the city. Capped this merit increase at 2.5%. So it was explained to me by some board members that as a board, we can authorize higher increase on staff based on our evaluation. I'm not saying that's right. I'm sure there is a base for that, but I'm just kind of wondering from the city why it can practice. Both staff we are trying to provide a salary increase are executives in terms of the city executive field. What's the standard or the maximum raise the executive tend to get, and then how often do they go beyond the maximum merit increase that the city manager allows?
So I think I can probably speak to one part of your question, Trustee Sun. And what I can explain is that the city manager does put out what are known as MPP guidelines on a fiscal year basis for those employees under the city manager's purview in case of the different ratings. So the highest in this last fiscal year increase for an outstanding overall MPP was, I believe, 2.5%, and then it downgrades from there. Now, in terms of what is the maximum or how often that maximum is given out, I actually don't have that data available to me at this particular moment. I do know that occasionally there are additional compensation, or there is additional compensation granted to individuals who are given, a very, very good performance appraisal. Now, in terms of the independence of the two retirement boards, I believe that it has previously been determined, if they wanted to provide a different performance or merit increase to their staff, that they are allowed to, but I actually can't speak to that determination, as I don't have that information in front of me. So I believe that it's been provided to the boards on a previous occasion, and so that's why it's not particularly in mirroring what the city manager's guidelines are. So I apologize if that's not a full answer for you. I just don't. I frankly wasn't prepared for this part of the conversation, so I don't have that information in front of me right now.
Well, thanks for answering my question anyway. I'll take that into consideration. Thank you.
Okay.
Okay.
Thank you again, Cheryl, for coming back. Appreciate it.
Absolutely.
Very helpful. Okay. So for this second, for 5D, we still need a motion on this item, if anyone's ready to make the motion.
I'll make a motion to provide 5% for the CIO.
Okay, we have a motion from Trustee Jennings. Is there a second?
I second the motion. Is Trustee Orr?
Thank you, Trustee Orr, for the second. Any other discussion from the board? Discussion from the public? Okay, let's do the roll call vote. Trustee Horowitz.
Aye.
Thank you. Trustee Jennings.
Aye.
Thank you. Trustee Kelleher.
Aye.
Thank you. Trustee Orr.
Aye.
Thank you. Trustee Sun.
I continue vote no, but I want to emphasize that my vote does not reflect any negative or disagreement on both employees' performance. I think they're both outstanding performance, both provided outstanding performance last year. I basically voted no because I don't understand the city's practice on the executive field, and I know the merit raise has a capped at a certain percentage for some reason. So I just vote no on principle, but that doesn't. I don't want my vote. I want to emphasize my vote does not reflect my evaluation of the employee performance.
Okay, okay, thank you. I also vote aye on that one. That motion carries 5-1. Thank you, everybody, for your discussion. And thank you to Mr. Pena and Mr. Palani for your wonderful work this last fiscal year. Going on to item 6, committees, reports, recommendations. The investment committee is 6.1. The last committee meeting was on August 25th. Next meeting is later this month. Let's see. Is there, Vice Chair Chandra is out now. Is there any oral report from any of the committee members? Okay.
For the investment committee?
Yes.
No, nothing immediate. Our next one is coming up really soon. Nothing material. Thank you.
Okay. Oral update. That's the, I'm sorry, the item A, oral update from the chair. Minutes are received and file from 26th Joint Investment Committee as well as Federated Investment Committee. 6.2 Governments Committee. Last meeting was back in June. Next meeting looks like it's not until December 17th. Trustee Horowitz, is there any oral update?
No, the last meeting was canceled, and the meeting before that concerned our strategic planning sessions and preparation for that. So there's nothing new, and our next meeting is on the 17th.
Great, thank you very much. Item 6.3 Audit Committee. Last meeting was in August. Next meeting is today. Is that right? Is there an oral update from Trustee Kelleher, Chair of the Audit Committee?
Sure. So at the meeting this afternoon, we will be getting some communication on the audit from Grant Thornton. But that's really the major thing that we're facing right now.
Okay, very good. Thank you very much. 6.4 Joint Personnel Committee. Last meeting was August 8th, and we have another meeting next week. Is there an oral update from Trustee Orr, Chair of the JPC?
Mr. Chair, I'm Trustee Orr. You were not able to attend the last meeting, or were you?
For the September 8th meeting?
Yes.
I can't quite recall. I know that
I don't know if you were able to attend.
I have to check my notes. What we did was we reviewed through the latest version of the evaluations and the language around that.
That is exactly right. Thank you, Trustee.
So whether I was there or not, I'm pretty sure that's what happened.
Yes.
Okay. And then minutes from August 11th are received and file. Item 7 is education and training. We have a number of opportunities, so thank you, staff, for including all of that. Any future agenda items? Any additional public retiree comments?
Mr. Chairman?
Yes, Council.
Thank you, Harvey Wiederman. I wanted to just take a moment to acknowledge the untimely passing of the City Attorney Rick Doyle, who appears on our agenda today. Rick was a remarkable individual. I had the privilege of working with him off and on for a couple of decades. He was always an incredibly honorable gentleman, smart, reliable, practical, and someone who, from a professional standpoint, I had deep, deep respect for. His passing was unexpected and it's just I think a terrible loss to the city of San Jose and all of us who worked with him. And I just wanted to acknowledge that publicly for the record that he will be missed. He was one of a kind. Thank you, Mr. Chairman.
Yeah, thank you, Council, for the beautiful words.
I agree.
Yeah, wonderful person.
Yeah, it was very sad.
Okay. With that, we're adjourned. Thank you very much, everybody. Great to see you all. See you next month.
Thanks, everyone. Have a good one.
Thank
Bye-bye.
you.
Thank you.
Thank you.
Thanks.
Thank you.
Bye.
Mark, do we stay?
Yes.
Before we go, Trustee Kelleher and I think it's Jennings and Trustee Son. I'm not 100% sure. We have an audit committee that follows. So, Linda, do we sign off on this one and then sign on to the other one?
I don't think so.
Linda, Marty, are you there?
I think we stay.
Yes, you stay on the line.
Stay.
We stay here. Okay. Okay. Thank you.
Okay. Bye, everybody.
Oh, it's
Bye.
Jane.
No, it's Kelleher, Jennings, and Son.
Yes.
Okay, so you're not.